Hello friends, welcome back. Patrick here. So today in this review, I'm going to be talking about GIK that's going to be merging with Lightning eMotors. But it's actually going to be a double header because tomorrow night I'm going to review NGA merging with Lion Electric. So this week is all about electric vehicles. I know you guys are following them fairly closely, so I'll tell you, do I think it's a good investment or not? So you guys know the structure of the reviews. I'm going to look at what happened in the past with this company. Then we'll look into where are they going now with this merger. Then after that, I'll look at the financials and valuation. And finally, how I'm going to be playing these stocks. The previous video, if you guys remember, I mentioned that GIK might be a good play for warrants. So we'll dive deeper into that. So let's get ready to start, but please remember to like and subscribe, it really helps out. And quick reminder that WeBull extended their promotion until the end of December. So if you want to get 4 free stocks, be able to trade in off hours and also support the channel, look in the description for the link and also in the comments. Thank you. Alright guys, so let's get started with the review, and the good thing with this one is that it's fairly straightforward and easy to understand because we already know the business model. It is very similar to XL Fleet PIC, right? So they don't build vehicles from scratch. What they do is they retrofit either existing vehicles or vehicles coming out of the factory, and then they convert them into electric vehicles. So they are working mostly on Ford chassis, class 3 to class 7 vehicles. So you guys can see on the screen, right, you have the shuttle buses, you have the cargo vans, you have the box truck, and then you have the city bus. However, the good thing about this type of platform is that it is fairly easy for them to adapt them to new products. So they can add like other types of vehicles, right, from other manufacturers. It is fairly easy for them to adapt the platform. So when I look at companies like these, I see companies that have a higher floor, right, because they're not building from scratch, but at the same time, usually a lower ceiling because they don't produce the entire vehicle from A to Z, right? They don't have that premium. They are only adapting their proprietary technology to someone else's platform. So if we look at the basics of the transaction, they're supposed to close in the first half of 2021. My best estimate right now would be sometime in March, depending on the SEC. The valuation at the IPO price was $651 million. This is fairly low compared to other electric vehicles. We'll look at that more in another section of the video, but keep in mind the company is very cheap compared to other electric vehicle companies right now. So two important things is that they have 25 million in pipe. You guys know that this is very low compared to other companies, and because of that, right, there's going to be warrants and 25 million in pipe, but that's very little compared to other companies. So even though there might be some selling pressure after the merger, it's not going to be nearly as bad as we've seen with other ones. Like, you're not going to probably see a huge 50% crash on this company. Then last but not least, they have 273 million in cash after the transaction, so they have plenty of money to fund their growth. Now, one thing we want to look at is that the company already has a lot of firm orders, and this is a very good differentiator from other electric vehicle companies. So it's not like, hey, let us try one and then maybe we'll buy 250 later. The company already has 100% of their 2021 revenue in firm orders, and then 25% of their 2022 projected revenue of 354 million under firm purchase orders. So keep that in mind, right? The company already has orders, so they're already trying to fulfill these orders instead of trying to find new customers already, right? So one last thing, we'll look at that later, of course, but they expect to do about 20,000 medium-duty commercial electric vehicles by 2025. So if they can reach that like scale, the company is going to grow tremendously. What else do we need to know about this company? Well, right now they have 120 units on the road. That's a fairly small number, but given the fact that it's a new industry, that makes them the market leader. You guys know the cliche, that always makes me laugh, but even though like it's only 120, their competitors aren't really in the market yet. They're not even in production. So yes, they do have the first mover advantage, and that does give them a competitive advantage over other companies that eventually will compete with them. So they do have 1,500 units that are pre-ordered, firm committed orders, and that's a great sign. That gives the company a lot of credibility because This not only demonstrates that they can deliver on their product, right? They've already have 1 or 20 that they delivered, but also some of these orders are repeat customers. And if they didn't like the product, they wouldn't be ordering more. Now they're talking about some of their customers. They have Amazon, DHL. Like, this is not a huge deal to me because it's not like with Arrival that's custom building delivery vans for UPS, which will buy thousands of them. This is more Amazon, DHL dipping their toes, right? They're going to be buying some of them, testing them out, comparing them with other competitors eventually, and over time they'll narrow down who they want to work with. So it is a positive, but I wouldn't read too much into it. It's not like they decided, hey, Lightning eMotors is our partner for electric vehicles. If eventually they announce a bigger order, then yeah, it might be a game changer, but for now, it's not a huge deal. So investment highlights, let's go over this really quick. You guys know that I want companies that are in growing industries. Well, we all know that the electric vehicles is the industry of the future. 67 billion in total addressable market just for the medium duty commercial vehicles. They have the regulations. You know, the Biden administration wants to convert the government fleet to electric. Then you have California, you have all of these other states that are going to be following. So this is a big deal. This is really going to help companies like Lightning eMotors. So they have the 50% plus market share, but we'll see if they can keep that market share in the future. They are with 30 fleets right now that together operate 500,000 vehicles. This is a great opportunity for them to sell more to the customers that they already have. Right? They have these pre-existing relationships. Now that's going to help them gain more contracts. The only thing I kind of disagree with here is the defensible competitive mode, and this is really overstated. You have a lot of companies that are similar to these, and they will pop up in the future. So what they do is they source all of these third-party components, kind of Frankenstein them together, and then they call them their proprietary technology. Yeah, it's not really proprietary. Like a lot of the other companies do the same thing. This is kind of what Ride does, right? They're getting their technology from a third-party company. Then they have the means of production. They're sourcing all these parts from other companies, and then they'll be putting all of them together. Well, Hyliion does this with the Class 8 tractor trailers. You have Ride that does it with the pickups. So a lot of these companies can do the same thing, and I expect that we'll see a lot more of them in the future. So, you know, right now, their big advantage is that they're first to market, but I wouldn't go so far as to say they have a huge defensible competitive moat. All right, so if we move into the revenues and how they're going to be attacking this market, this is where it gives me a lot of confidence and kind of excitement even. I'll be honest with you guys, I was very skeptical in the beginning, where like before I started to read into this company, I was like, hey, it's just one more electric vehicles. There's going to be more competitors, as I talked about before. I'm pretty convinced of that. So how is this company going to be like so much better than the other ones? But when you read about it, I can see the path of growth for the company. So according to them, they are at the tipping point with accelerating sales cycle for Lightning eMotors. What that means is, according to them, there's a lot more interest right now in the products than there was in the past. So currently they have 130 fleets that they're in the early stages of, talking with them. But then they have 41 fleets that are more testing out the product and seeing if they want to commit to an order. They do have those 20 orders, and then they have 10 fleets with repeat orders. This is a huge credibility booster for the company. It means that the companies actually like the product and want to buy more. I like that a lot. But it's especially this graph that gives me a lot more confidence. So they have a clear path to 1 billion contracted revenue by 2025. Look, don't get me wrong, we're used to these companies, especially the electric vehicle companies, projecting huge growth, right? We'll sell for $1 billion worth of products in 5 years from now. Well, here I can actually see it, especially because the company is already in the market and they already have those orders and firm numbers. So they have 120 million in repeat orders in Q3 of 2020. So this is not a projection like 5 years down the line. These are orders that they have right now, and the pipeline is expanding very rapidly. So this kind of gives you an idea of like their prospect pipeline. Of course, it's only prospects, but we know that the market is growing and they do have products that they're delivering right now. So most of these prospects, if they're in the market for electric vehicles, they will have to go with this company because they don't have a lot of competition right now. So their units were pretty flat, right, in the prospects for several months. until June 2020, where it went from 2,900, then 4,000, 5,700, and then 6,300. So it's just going to keep growing exponentially. You guys know that when J-Mac did his interview with Thomas Ely, he mentioned that the SPAC process really helped Hyliion, right? Instead of them having to do outbound calls to third-party companies trying to sell to them, now you have fleets calling them to inquire about products. Well, the same thing is going to happen here. The SPAC process with GIK is going to really help Lightning eMotors get a lot of interest from companies that normally wouldn't have called them, because being a public company is going to give them a lot of credibility, and they already have products in the market. So look for this pipeline to grow exponentially over the next several months and several years. So as we talked about earlier, they already have the purchase orders to fulfill 100% of the 2020 and 2021 revenue. And then after that, everything I've seen in the market, every specialist in the electric vehicle industry says that 2021 is kind of like the tipping point. That's when the market's going to really start to expand rapidly because of regulations, because of mandates from the different governments. So you guys can see this chart here. The green part is just California, but there are other companies too. And it's going to go from less than 5,000 units, zero emission vehicles, to over 20,000 in a matter of a couple of years. And you guys know that their plan is to get to 20,000 units in 2025. So if they can get even a fraction of the market, they're going to do extremely well with their revenues. All right, guys, if we look at the revenue projections, this is where you'll have to decide for yourself if you agree with these projections and if this is a business for you. So they have the pipeline that is growing, 130 million in March to 800 million plus in September. So that they already have in the books, so you can count on that. But it's the 195% in compound annual growth rate that you have to decide for yourself if you think that they'll achieve it. They would go from 63 million in revenues in 2021 all the way up to 2 billion in 2025. Now, it is an industry that's growing. They are the first movers in that market. For now, they don't have a lot of competition. So I can see them getting to that type of revenue in the next few years. But I personally don't really like these types of companies. I prefer companies that are more digital, software, finance because of the gross margin, right? So this is reflected in these charts. In the EBITDA, companies that have to make products, it's always more difficult for them to generate a real profit at the end of the day because the margins are lower and they just have a lot of capital expenditures. So in the EBITDA, as you guys can see here, right, they are only going to be positive in 2022, and then according to them, if they can get to 2 billion in revenues, that would give them a positive EBITDA of 315 million in 2025 if everything goes well. But that's not even the free cash flow, because here the real profit at the end of the day would only be 50 million on a $2 billion revenue. Right? And this is, again, according to their projections, if everything goes well. And this is going to be reflected in their cash balance, which is going to go down every year. So 226 million the first year, then they'll lose money, they'll lose money, they'll lose money. And then are they going to need to raise more money in the future? It is very possible. So if everything goes according to plan and they do get to 2 billion revenues, they think that in 2025, now their balance sheet is going to start increasing. They'll have more money at the end of the day. So that's up to you. Do you like this type of business model? I like to speculate on it. And we do know that if they can get to those revenues, the share price will go up a lot. But personally, I still prefer companies that are a little bit more financially sound, but that's just my opinion. So if we look at the valuation, according to my calculations, the company would be valued at $729 million, which is very cheap compared to its competitors, right? Even XL Fleet is more expensive than that. So if we look at it, right, the pro forma shares is going to be 82 million shares. And then what you want to do is multiply that by the current share price, which as of me filming this is 10.96. And then after that, you have to subtract the money that they're going to have in their account. And that gives me a valuation of 729 million. According to me, this is very reasonable. In fact, it is very cheap compared to the other electric vehicle companies. So I think that they did a great job at negotiating this for us. Alright guys, so here's the moment of truth. What do I think about the company? How am I going to be playing it, and does it get my seal of approval? Well, let's start with the latter. Yes, it does get my seal of approval. I think this is going to be a solid investment. Not my favorite investment in the world, but we just cannot go against the trend, right? So far, electric vehicle SPACs, 100% of them have been successful. And you guys know they've been really successful. We're talking about a lot of companies that have gone up over 100%, 200%. So is this company going to buck the trend and be the one failed SPAC when it comes to electric vehicle companies? It's possible, but it is unlikely, especially with its current valuation of $729 million, which is very, very cheap, right? So me investing in this company is not a big risk. At worst, I'll break even for a while, and over time it's going to go up. So for me, this is a great investment. It gets my seal of approval. If we look at the chart a little bit, right, it actually spiked at 1640 when they announced the merger. Before that, there was a lot of rumors around it, so that's why it had gone up already. Now, since they announced it, it really went crashing down to under $11 at 1096. And to me, that is number one, excellent, right? This gives a great opportunity to buy this stock when no one wants it, knowing that over time it's going to go up. This is what happened with Canoe. This is what happened with a lot of different companies that don't have a lot of interest. And then all of a sudden we get to the merger, and all of a sudden it's the hot stock. Everyone's investing in it, and it really blows up. So I do think this is very likely going to happen with this company. Now, if we look at one of its competitors, right, company that is very similar and people are going to associate it with is going to be PIC, XL Fleet. Kramer actually talked about this company on Friday, and that's going to make the share price go up. So it closed at 1532, but already after hours it went up to 1774, and you can expect that next week it's going to go up. He was talking about a price target over $20. Now, that's very possible that this is going to spill over to GIK because the company are very similar, and people are going to say, well, this one's too high. What's the next best thing? They'll go for GIK. So PIC, right, spiked to 1948. Since then, it's dropped a little bit, but as I mentioned, Kramer made it go up. So we'll see what happens with this one, but I do think that GIK compares very favorably. $729 million is very cheap. Now, let's look at my spreadsheet real quick. I'll show you guys why I'm going with warrants. I bought 2,500 warrants. I don't have a huge position, but I want to have a little bit of exposure. So if we look at PIC compared to GIK, right? So the share price at 1532 compared to 1096. But then if we look at the warrant price is 465 for PIC and then 230 for GIK. So literally half of the value. Well, what's going to happen over the next several months, right? When the merger happens with GIK, can I see the stock going back to $14, $15, exactly like XL Fleet before the Kramer pump? Absolutely. So is there a time where the warrants are going to go from $230 rather, up to $4, $4.50? I think it is very likely, which would be a 100% gain. I think my cost basis, I didn't look today, but I think it's like 216 or something like that. So with a leverage ratio of 4.77, for every share at 1096, I can actually get 4.77 in warrants. So that means that that's really going to exponentially increase the return if the warrant price does go from my 216 all the way up to $4 or $4.50 or something like that. So to me, this is what's probably going to happen. I think this is an excellent play, and that's why I bought warrants. So guys, let me know in the comments what you guys think. Tomorrow is going to be the NGA review. A lot of it is going to be a lot similar, of course. All the electric vehicles have been successful so far. But let me know in the comments if you're going to invest in this one and what you think, and I'll see you guys tomorrow.